Good morning, VA Rep. I'm Jeff Wilson. I'm joined here with G2, and we just want to welcome you all out there who are watching this amazing production. This session is going to be great. It's going to be full of information about VA home loan benefits from our session participants, which come from VA. We've got Mark Connors, the lender liaison for the Department of Veterans Affairs Loan Guarantee Service. We've got James Heaslett, who is the chief appraiser. And we've got all the way from Phoenix, we've got Heather Spores. Heather is the new chief of policy, and it is such an honor to have them all with us today, and we're so happy that they're with us today. But before we get that, a word from our sponsor for this session, and that sponsor is Caliber Home Loans. So Caliber Home Loans feels very strongly that it's our duty, obligation, and responsibility to serve the veteran and military population that we have here in this country. One of the things that we really enjoy is our long and tenured participation with VA Rep to provide training and education to our partners in the real estate industry. And I'm proud to say that Caliber has had a long history with VA Rep, including members of VA Rep as well as supporting VA Rep. And so to honor that, we're very happy and proud to say thank you, VA Rep, for doing what you do for all of our nation's veterans in helping our real estate industry learn and do VA loans the correct way. So kicking that off, we've got Mark Connors out there. Mark, please give us a rundown on what you've got for us today and introduce James and Heather for us.
Thank you so much, Jeff. To start, on behalf of our executive director, Jeff London, and our deputy director, John Bell, Jeff, I want to say it's an honor to be with VA Rep. Again, I think the very first policy conference that you had, John Bell and I attended. And I believe that might have been 2012 after San made a couple visits to DC and we got to know you, and we haven't missed one since then. And you know, in a moment I'll turn it over and you mentioned James Heaslett, our chief appraiser, and Heather Spores, our chief of policy. But before I do, just want to go over quickly a few numbers that I think your members are going to be find very encouraging. You know, we run the loan volume numbers every day, and I think we're over 1,090,000 loans. We'll probably hit the 1.1 million loans within a few days, perhaps by this time next week, and then more importantly, for your members, our purchase loans, we're probably going to hit 300,000 fiscal year to date purchase loans. Probably, it would surprise me if we didn't hit that today. And so year over year, that purchase volume has grown over 7%. So, and you know, of course, that comes without getting additional what we call FTE or full-time employees. So you know, we've been who would have thought the housing market would have done this right during the pandemic to begin with? But you know, our folks haven't missed a beat, and you know, we certainly have been working. We certainly have been feeling it like the rest of the industry. But you know, Jeff, I'm looking forward to today's conference, and I'll pass it back over to you.
Well, thanks, Mark, and I really appreciate that because, you know, after my tenure with VA in almost 3 decades and knowing the people that I know at VA, I know you guys are working so hard because the volume is up almost twice what it was 3 years ago when I was with VA. And I know that your staffing is the same. So for everybody out there who wonders what VA does, we've quadrupled their volume in the last several years, and they're still doing it for us all with the same number of people. So I think there's a huge kudos goes out to all of the people at VA that work hard for all of us in this industry to make sure that we can do the loans that we can do for veterans. And that's just super that, VA is able to keep track of all of that. And I want to go ahead and get started with our first question. We're going to ask questions of James and Heather over the course of this time that we've got left. So G2, you want to take it away and ask James first question?
Well, before I do that, Mark, don't go away. I got a question for you. It does. It absolutely does. Do you like it? It's one of my favorites. I noticed that. You always come in and compliment me. Thank you. Hey, listen. You guys were talking about the numbers. I was remembering, and help me if I'm remembering correct, but around 2016, 17, right around there, the total volume year to date for that one, or the fiscal year for that one, was about, I want to say 700,000. Does that sound right? Or might have been about 500,000 loans? Yeah. So, and since then, last year we closed well over 1.3 million, right? Yeah. So would you argue, I want to put you on the spot, but I'm going to put you on the spot. Would you argue that VA reps' attention and our efforts to talk to the mortgage industry and the lending industry has had some role in bringing that number from 700,000 up to 1.3 plus million?
Well, that's you're certainly not putting me on the spot at all, G2. And I'll tell you, if it was not for our industry partners, there is absolutely zero way that we would have been able to accomplish the numbers that we're accomplishing. And from our director to our deputy director to all of us on here, we're exceptionally appreciative of all of the work that VA Rep and all of our other partners are doing. Again, we absolutely would not be able to do it were it not for your commitment, getting out there each and every day with the one mission in mind, and that is to help our veterans get into homes.
We appreciate that. And we appreciate, like Jeff said, everything that the VA has done to support us over these years. We were a fly on the wall when you first met us, and almost a decade later, we're probably an elephant now. We're much bigger. But thanks again. Jeff, go ahead. Go back to that question. Hey, Mark, thanks. And you need to come out to Arizona. Jeff and Heather are out here all the time. And you need I'm sorry, I said Jeff. Mark, you need to come out here to Arizona and have a cigar with us.
Will do, G2. Thank you very much.
So hit that first question for James.
James.
Yes, sir. How you doing?
Are you there?
Yes, I'm here.
Hey, buddy, I got a question for you. So these are some questions that have come up over the past year-ish, yeah? And of course, with COVID totally screwing up everybody's life over the last year. So can you discuss the current volume of Tidewater appraisals as well as the VA, how the VA is handling the increase in reconsiderations of values requests and the timeliness for the responses of these? You got an idea to share with us on that?
G2, it's kind of a muddied situation. So it's very difficult to track the actual numbers of Tidewater, to actually just pull a report and say, here's how many Tidewaters that were done. Because they're done in free text notes. So it's not a field that is captured. But I can tell you, in this current market, it's a lot. Just by the responses, talking to lenders, talking to real estate agents and VA representatives, the amount of time that appraisers are having difficulty showing support for the market contract is difficult because the market is just smoking hot. In most areas around the United States, it's very, very difficult. What I can tell you is that that conversion rate to what how many times that appraisal is uploaded and is not supported of the contract. Right now, we're looking about nationally average 13%, which I found very interesting. I would have put my gut that it was much higher, but that's the data. I poked around in several large markets, the Southern California, the Las Vegas, of course here in Phoenix, the ones I know the most, but even in Houston, the Atlanta, we're finding that 13, 14, 12% is equal, and that's a good sign. The fact that it's equally distributed throughout the United States, there's not pockets of certain appraisers not coming in at value or not finding market support. It's equal throughout the United States. So that doesn't really answer you. That doesn't answer your question to the Tidewater. I just know it's voluminous. It's just not a number that we're able to run reports and calculate.
So how does that stack up to the same calculus in the FHA and conventional arena? What is there? Do you know what their percentages are?
They don't track it. So I tried to reach out to my FHA counterparts to find out how many times they're not able to, they don't see their appraiser supporting the contract. Because the biggest difference is when an appraiser doesn't support the contract for an FHA, that number sticks with the property, as you know. And so that's not like what VA does. So they're not able to track that for the mere fact they don't maintain their panel. They don't have oversight of their panel as VA does. I have had some conversations with the GSEs on the conventional side that have always touted to be, they've always seen appraisers to be number hitters, that conventional appraisers always hit the contract. That's not the case. They did tell me in the market of Miami, 38% of conventional reports weren't able to support the contract. So I don't think VA is alone. We're not an island. This is just unique in the market. We all know if anyone's in this market, in a major metropolitan, metroplex market, inventory down, interest rates are low, lots of people moving. It's a hot market. And in those hot markets, it's common to see appraisers find difficulty to see support, especially when they're bidding over contract, when they're bidding over asking price. That difference is very difficult to say that there's market value, because I doubt that agents out there are undercutting the values of the house when they list it in the first place.
Yeah, no, not so much. Well, you understand the reason for the question and the.
Oh, absolutely.
Yeah. So bottom line, and we really can't share with the audience a statistic that says that combats the frustration that we hear over and over again. That VA appraisal came in short when compared to a conventional loan. We don't have a statistic.
That's 13% on the R. So I know 13% come in short. The Tidewater, because a lot of Tidewaters go out, and then agents do find evidence to help that appraiser, and they do come in at value. But we know 13% nationwide, and I'm rounding it to 13 in fractions, but 13% is our national average as of 22 days ago when I last ran that report. It's 13% nationally overall. The appraiser not able to support that contract or find market evidence to support that contract. But I don't think we're offline from conventional and FHA as well.
Do you have a similar statistic for ROVs?
So ROVs are much lower. I will tell you, ROVs end up even during COVID is less than a half of 1% of our purchase loan volume ever result into an ROV. It is very.
Do you think?
Go ahead.
Do you think that is a product of the quality of the appraisal, or do you think that is a byproduct of the understanding of the ROV process by the real estate agent? If you had to throw a dart at the wall, what do you think?
It's the byproduct of not understanding the process. And I would say both lenders and by agents. We do ask that the veteran initiate it. But if we have, obviously, if a veteran was attached to a quality, well-trained agent, such as VA rep, that would be able to counsel, educate, say, hey, here's some options that we still have. And we're getting better at that. In fact, I'm putting together some information for a representative out of Indiana. And we are trying to automate to make this a little faster process. Because I understand, G2, we're from the same market. When that appraisal comes in short, time's very short whether or not that contract's going to stay alive. We need to be better on our side to be a little faster at it. The information needs to be composed a little better coming in. And so we all have a little bit of work to do. Both VA, we can always offer training to any agents that need it. So I think it's a lack of understanding across the board.
Thanks a bunch. I really appreciate that. You really filled in a lot of blanks. Jeff, what do you think?
I think it's a wonderful thing that we're able to actually not only have that first shot at Tidewater, but the VA, we try to tell all of our agents it's a second chance it's a second chance appraisal, because we do have the ROV process on those purchase appraisals, and our partners at VA are working really hard to try and get those out quickly, and we've seen some amazing things out of the VA staff. And if our partners would learn the VA process of an ROV, we could probably save a whole lot more loans for our veteran borrowers.
Yeah.
So I want to transition over to Heather now. Heather, can you discuss with us what VA is doing to accommodate this new process for certificates of eligibility for our National Guard veterans based on the new legislation from January 5th?
For sure, Jeff. And thanks first and foremost for having us here. 100% love this opportunity to be able to discuss certain maybe contentious or misunderstood elements of the VA home loan. But the Johnny Isaacson and David P. Rowe Veterans Healthcare Benefits Improvement Act of 2020 was a really significant piece of legislation for the VA home loan benefit. And this act actually expanded the definition of veteran for the purpose of the VA home loan benefit to include National Guard members activated under certain Title 32 provisions. So this extension is exceptionally timely in that so many of our National Guard members were activated over the last year to respond to the National Emergency Declaration for COVID-19. So thank you all for all of your service. To be eligible under this change, a member of the National Guard must serve at least 90 days on Title 32 orders, of which 30 days must be consecutive. So I'd like to point out this time does not include an active duty time such as monthly drills, and it does not include basic or initial training. But from an eligibility perspective, we immediately put internal guidance in place to assist any veterans wishing to establish eligibility under these provisions. And we really took right to trying to get as many of these veterans COEs established, get their eligibility to them so that they may use the benefit as quickly as possible. Most recently, since then, we've published VA Circular 26218, and we've released additional internal guidance to assist our loan specialists in the eligibility review process. So we don't anticipate, any difficulty implementing this specific change. And since enactment, we've improved about 650 COEs for impacted National Guards persons. So we're incredibly fortunate and grateful for their service.
That's an incredible number. I wasn't expecting it to be quite that high because, it's got some details that they have to meet in order to get that eligibility. And I think that's fabulous that we've got over 650. That's an amazing
It's
number.
fabulous too, Jeff, to point out that this wasn't this point going forward legislation either. This was retroactive to include those veterans who were activated maybe in support of Hurricane Katrina or Sandy or any of the like. So this has retroactive applicability, which is truly unique to a lot of the legislation that has passed recently. So we're very fortunate in that, and I think that helps to increase the number of veterans who will be eligible under this legislation.
Is there any way you were able to actually track any of these to determine whether they're post-law or pre-law, to actually get an idea or scope of how many past veterans are now realizing that I was denied before, but I'm eligible now?
So unfortunately, our system enhancements are not that are not that quick to be made, but we are working on finding a way to track those and to actually better enumerate those that we have approved, and then potentially to identify some. But it's a very difficult task to go back in time and see why someone was denied. So I would just encourage anybody who knows a veteran who may have had service under such orders to have them apply for their COE to see if it does.
For the benefit of the mortgage people who are on, can you give us a real quick, brief rundown on how the mortgage people out here in our audience could possibly better improve our applications to you guys, so you're better aware that this is a COE request on a National Guard veteran according to this new law? Is there anything you want us to do special?
For sure. So any evidence that the lending institution can provide to help demonstrate that service, especially in past service. Our records and interactions with DoD have improved so much over time, and we do get a lot of information directly from the source in a lot of instances. However, that unfortunately is not retroactive. So when it comes to the Hurricane, Katrina era, and even before that, we're not going to have evidence of why someone as a National Guards person was called to service. So any evidence that they could provide to show that, orders, a statement of service, something from the branch, DD 214 or the like, to help us, establish that eligibility.
Great. Okay. So basically you want us to make sure we're documenting our request, letting you know that this is a National Guard veteran who we're trying to provide eligibility based on that service time frame, as opposed to a 6-year National Guard veteran. Then that would be helpful to you guys, so you could, maybe pinpoint the right direction that you're looking for.
That would be exceptionally helpful. A lot like the documentation we may request if a reservist or a National Guards person was activated under Title 10 orders, the same sort of applies here. We need documentation to support their activation.
Great. So y'all heard that out there. Make sure that when you're sending those in, try to be a little more descriptive. It'll help VA tremendously to get the right direction on your certificates requests. G2, you want to ask James another question?
Hey, James, you're up again. So we've heard that some RLCs are processing waivers of condos, condo approvals. If the complex has been denied, can you expand on and expound on how the condo waiver process is, how that works? You gotta unmute, buddy.
You're muted, James.
Yeah, there now good. I was gonna say, I love this question. This is a passionate topic of Jeff Lundin. We want to empower veterans to be able to live and choose where they live. We have been looking at the CFRs that guide that condominium complex, whether or not it's approved or not. And Jeff Lundin we have gone through some research, gone through our legal, realized that Jeff has some waiver ability, some powers to waive certain aspects of it. And so we started a waiver process about 10 months ago. And we have waived hundreds of them. And so what we find is that when a condominium project is denied or found that do not comply with VA's regulations, that the veteran could simply just ask that the VA act in behalf of the veteran to submit a waiver. Right now, this is a interim process. So the waiver would go from the Regional Loan Center lender, making a statement of why it has been denied, that they accept the responsibility, that they don't feel it harms them. And it goes from the Regional Loan Center to my staff. My staff has a 1-day turnaround time. That has to go to Jeff Lundin. Our executive director holds himself accountable to a 1-day turnaround time and to approve it. Right now, all the waivers have been sent to us. We've denied 2. And that was for lien position, had nothing to do with the condo. So we're real excited that we're doing this for veterans, not only allowing veterans to be empowered to live where they want to live, They're just actually just homes with a different form of ownership. Short-term leasing restrictions are far the majority of the reason why they're denied. The same short-term leasing restrictions that you see in single-family housing in any PUD. And so we don't see a harm to veterans at all. We see veterans doing a lot of refinance because they're already living in the condominium, but they're forced into higher or other loan products that are not as advantageous for them as that. So that's our interim policy. Right now, our executive director is spending his precious evening time approving these waivers. We're going to move this out to policy, allowing the lenders to have that authority to waive it at their level. So we look for that to come very soon. We're really excited about it, and we are empowering veterans to live where they choose to live.
So is this out in a circular, or is this how is this announced?
This is announced. So when a veteran is buying a condo and it's rejected for some reason, our VA staff is conveying that to the lender at that time.
And the lenders then are tasked with knowing what this follow-on process is.
Yes, they are.
Jeff, how's Caliber handling this?
Right now, we're just asking what the reason was for the actual denial. And then we're looking at our risk as well, because the lender's obviously going to have to take a stand on the risk as well. But we're trying to stay within the law so that we can do the best we can for veterans.
Cool. All right. Back to you, buddy.
Back to me.
Yeah.
Heather, I'm going to have a question for you this time. One of the things that we're seeing in this heated market, and I know that this is somewhat legal and policy wise, and you're going to have to be careful in the way you answer. I get that, but we're having a ton of realtors asking if a veteran can sign another addendum that might actually usurp the VA's amendment clause and enforce or basically tie the veteran into paying more for a home than the value. And a lot are asking this because there's a misconception by many realtors in the industry that the veteran can't pay more than the actual appraised value. Can you touch a little bit on both the mandatory clause that VA has and maybe as much as you can, maybe on what VA might not be able to do if a veteran does sign one of those contract amendments?
So I'm going to preface all of this by saying I am not a lawyer. And, I definitely want anybody to understand from a contractual perspective that, it's very important to understand the contracts that you enter into. And from an education perspective, it's definitely important to know, what the escape clause from, an amendment is actually designed to do and what it does not do. So I'm really glad this came up, especially in this heated market. But the escape clause provides the veteran with an option to exit or renegotiate the contract if the appraised value is less than the purchase price. However, VA does not restrict the veteran's ability to purchase a home for more than the reasonable value, and the escape clause does not prevent the borrower from purchasing a home that doesn't appraise for what the contractual purchase price is. A veteran may bring in the cash and the amount of difference to close that loan. So I want to be really clear here. The escape clause does not in any way prevent the veteran from paying more than the appraised value. So what it is intended to do is to give the veteran an option at that point in time to leave the contract should they choose to, but there's nothing in that clause that would say you must continue. The veteran has the option to continue with that transaction. And to the extent that we're aware that there are, contracts out there that include addendums to potentially circumvent the escape clause, I'd say we're on really touchy legal ground there. And, from a comment perspective, I do want to hesitate before I say it's completely not allowed, because from a contractual perspective, we really do not have the ability to control what contracts a borrower enters into when doing that loan process. But from the perspective of our legal team, we would highly advise against it and find really any clause or addendum that circumvents the escape clause to be outside of the scope of our regulation. So to that end, just be really careful there. But the misunderstanding that the escape clause prevents the transaction from transpiring is completely a myth.
Hey, Jeff, if I could
That's
chime in on
great.
that real quick.
Absolutely. Go right ahead, James.
So, and I don't have much to add other than really more point to G2 is I would really advise agents to speak with their broker to make sure that they're not conflict in that contract and that their contract is still legal. That's another thing too, is I would really bring in, not a VA perspective, but I do believe from my time as a real estate agent that I think that would be something I would just recommend, that they speak with their broker and say, am I doing anything in this contract that might negate a legal contract?
Great. All good recommendations. Hey, James, we have a follow-up question that we're going to go ahead and ask. It came from our audience. We didn't think we'd do that, but we're going to go ahead and do that on this one because it's a really poignant question here.
Yeah.
A colleague said that she attended VA training session on appraisals, and the presenter said that some appraisers are accepting and or using pending or under contract properties as comparables. And she said she hasn't heard that and have not seen that as a true statement, but wanted to see if you could comment on that, or if VA is allowing appraisers to actually use pending sales or under contract to establish value, as opposed to use that as a supporting document to support the value they have from sales.
So that's not a VA policy. That would be a USPAP policy. So you can't place weight and say this pending sale supports the value, so I'm putting this is my weight, because it's not a sale. And we often see, especially again, hot markets, we go back to 2006, you have a pending sale waiting for this other pending sale to close. And so what you do is you get two pendings waiting on each other to close. And so that's why so value has to come from closed sales, but pendings and active listings show the indicator of what the market's doing. And we will always support appraisers to use what the market is demonstrating to help support and demonstrate their value. I've always advocated for appraisers, and I'm kind of tipped not by VA policy, but I always advocate for appraisers to talk to their lender, to talk to their agents. And if they feel there's a pending close that's going to absolutely help establish that value, if they can't get it any other way, maybe it's worth waiting a couple weeks. Rather than the process of coming in short, I got a pending sale. If it closes, that's the golden opportunity for me to support the value. And if all the parties agree, we're trying to do the best for the veteran. And if we're trying to do the best for the veteran, I think we're always going to allow that. I think we'd understand it, then communicate. I do expect all of my lenders and the appraisers to put notes in the VA portal, so we understand, say, why is this appraiser 3 weeks late? It's explainable. So to your question, absolutely. If appraisers have active listings and pendings in the appraisal report, that's their USPAP requirements. Can they place weight on them? No, because they're not a closed sale. They're not a confirmed sale.
Great.
But like you said, if the real estate agent has the wherewithal to understand where that pending is in its closing timeline, then because the realtor has already had a communication, most likely with the appraiser, he knows how to contact him and or the lender. He can ask the lender or appraisal, hey, let's hold off. This thing's closing tomorrow. And now, of course, he doesn't know there's a pending one in there, but he knows it's pending. And if he's got any brains about him, he knows that it's been picked up by the appraiser as he's beginning to do his work. He can ask a slowdown on that, and then you pick up that comp, yeah?
Yeah, absolutely. And I've called a lot of agents. I hope I never had to call you, G2. And you kind of tiptoe with that agent and say, hey, I know you're pending at this price, but where do you think you're closing at? And they give you the big old, I can't disclose that. And you're just like, ah. Yeah. But there are the times, that's what's pending and showing MLS does not necessarily mean it's closing at that value as well.
Yeah, and just real quick to our realtor friends who are watching today, and that is, as long as you've got permission from your seller, or if you're the buyer and you can communicate with the seller of that pending and get some information about when it's going to close, you can with the permission of the seller, with the permission of the owner, disclose that. It is not a carte blanche. You can't do that. So be aware of that, especially if you're in a VA transaction, because, and this is what I really love about the VA product. We get a do-over before we need a do-over. That's what the Tidewater's about. So if you've got a tough transaction and we're in the situation that we're talking about right now, there's a good chance you've already received a Tidewater notice. And if you're doing your work properly, you have an idea of where these comps are coming in or coming into play, and so do your work, settle down. Remember, the VA appraiser has access to the same darn information you do. Right, Jim?
Yeah, absolutely. And look, as an appraiser myself, real estate agents got a tough job. I get calls all the time from local agents around here say, James, I'm at this house and here's my offers that are coming in. How are they going to support this? And you raise your hand, say, it's a magic 8-ball. You shake it up and you look at it and you see if it's going to come in. And agents are up against it as well. There's agents out there that they're supporting a veteran buyer. And they're like, how do I advocate for my veteran buyer to pay over list price, pay cash, and then waive the inspections? How am I an advocate for my veteran buyer when that's the only way to secure a deal? It's a tough market, and hats off to you agents out there working today.
So I'm going to go ahead and ask you another question then, James. Recently, Circular 20-13 rescinded on April 1st, and VA allowed that to rescind and put a posting on the VA's portal. A lot of people missed that for whatever reason, not paying close attention, whatever. But since that time, we've had to field a lot of questions about how lenders and agents should handle cases where the sellers are apprehensive about allowing a VA appraiser into their house. Can you touch base real quick and on what we should still be looking at and what the appraisers should be, how they should be acting?
So go back in history. So let me go back before then. All the GSEs, HUD, myself, USDA, we are all kind of collaborating, talking routinely. And oddly enough, when we started the policy back in April, everyone saw only about 7%. I say they kind of about, it fluctuated up and down. About 7% of the appraisers were utilizing the exterior option. So 93% of all the volume through Fannie Mae, Freddie Mac, HUD, USDA, and VA were interior inspections. So when we came up to this circular expiring, at some point we have to go back to normal business. We saw a higher percentage or a smaller percentage of doing the exteriors. So when we elected to let it expire and go back to full lending, we are now 99+ % all interior inspections. Doesn't mean there's all of them. And so my courage is that it does not neglect the homeowner on a refinance or seller to require that appraiser to wear a mask. There's always options of having the homeowner open all the doors, turn on all the lights so they don't have to touch anything. Those measures are still absolutely acceptable for them to do and require or request. I do know that the GSEs have talked end of June that their policy is going to expire. And so at some point there needs to be some business as normal. I guess that if a seller's selling a house, there's got to be some expectation that inspectors are going to come in, that some people are going to be coming in their house. And so I just ask that we be smart, that we be a little bit prudent, and nothing forbids that a VA appraiser to wear a mask, wear gloves, to show some kind of distancing and work with the seller, homeowner, veteran, to keep it as safe as possible.
Great. I thank you so much for that answer.
Heather, we don't want to leave you out. So Jeff, you got another one for Heather?
I got one for Heather.
All right.
This is kind of a two-part question. We get a lot of these questions with regards to rental properties and keeping their property as a rental. Can you touch base real quick on how a veteran can turn their property from primary to rental? And from the VA aspect and perspective, what they need to provide to show to use their new COE on a primary residence?
Sure. So VA requires a veteran to occupy their home as their primary residence. Truly, that's what this benefit is intended to provide, a vehicle to obtain financing for a primary residence. So, the use or the primary use of it to obtain a second home or an investment home is not something that this benefit is designed to provide. However, once that occupancy requirement is met, if the veteran decides to move or purchase another property, VA does not prevent a veteran from renting out that existing home. So should the veteran decide to leave that property after initially meeting that occupancy requirement, they may do so and they may rent it out. It shouldn't have any impact on the mortgage rate or anything like that. And from the VA perspective, we also allow an interest rate reduction refinancing loan or an EARL to be conducted on a property that the veteran had once occupied as their primary residence. So, once they've turned it into a rental property at that point in time, we don't disallow them to, utilize the EARL or anything like that. So if the veteran had a VA guaranteed home loan and that property is rented out, their entitlement is going to be impacted by that encumbrance. So unless they sell that property and, and or refinance it into a conventional loan, there wouldn't be any restoration of entitlement. Therefore, the veteran would have reduced entitlement available to them to purchase another home using the VA guaranteed loan benefit.
Great, Heather. Thank you so much for that, because that is confusing a lot of people out there in the industry. It's amazing how many questions I get every day, every week on that issue. And I'm sure from a real estate standpoint, they're particularly worried about that as well. G2, we've got another question, I think, for James.
We do. Hey, James, the VA renovation loan product was introduced a few years ago. Are there any lenders that you're aware of that are offering it?
There is. In fact, actually, we're getting a lot of calls. John Bell's getting a lot of calls on the renovation loan. We temporarily suspended that during COVID. And the reason why I temporarily suspended that is when you have a home that needs a renovation loan, that appraiser would be required to go in and see the full interior of it. And we wanted to limit the exposure to our appraisers because that's a limited finite resource. We didn't want them exposed as much. But that's back when that policy expired April 1st, we're back to doing renovation loans. As to what lenders are doing that, I don't have a list, and I don't know if I could provide, say, here's the lenders that do renovation loans. But we do know they do exist. We do know lenders are doing them. And so VA is not one, we can't sponsor one lender over another. Such as Caliber, our sponsor here, if they're doing, I couldn't go out there and say, I say this lender or that lender. But they are doing them. We do recommend veterans to shop around for them and shop around for their lenders. But they do exist. They are doing them.
Okay, and so I'm going to bring Caliber in here since you're one of our sponsors. Do you know if Caliber is looped into this?
Yes. In fact, we were actually looking at our policies and strongly considering actually increasing our maximum loan limit on renos because, with today's cost of lumber and cost of materials, most lenders were running about a $35,000 cap on their renos. We're actually looking at bumping that all the way to 50. That's not, in policy yet. We're just looking at those things. But the bottom line is, I think, Caliber is not unique in that we're looking at the market, we're looking at the pressures on the market and what really is affecting a borrower's ability to do renovation loans. And one of those is caps on the size of the loan. But the other part is actually getting the renovation done in a timely manner. That's the biggest problem that we always have when we're doing renovation loans, is to make sure that reno gets done timely and that we can clear the escrow. And I think that's one of the big things that obviously we're locked into laws and regulations that keep us from doing that, right, James? So, we have to get those things done in a timely manner so that we can maintain proper guarantees. And I think that that's one of the reasons why a lot of the industry doesn't really jump into reno loans, because they have to carry that loan until such time as the reno's done. And there's, you can't just have a smaller company carrying that kind of liability and obligation. So I think that's really something that when you're working with good lenders, large lenders, caliber, I'll throw that out there. You're going to be able to do some of those things that you may not be able to do with other lenders. And that's not a ding on other lenders. I mean, it's just a matter of risk and liability.
You think the big boxes might be in on this?
Oh, I think yes, they
Yeah.
are. Yeah.
So maybe we'll hear something about that from our other sponsors as well. You got another one for Heather?
Yeah, I got another one for Heather. Heather, you commented. Would you be able to comment on issues that if the borrower is attempting to cancel a purchase offer? You touched on it real briefly when you were talking about the VA's amendatory clause, but can you actually specifically identify the reasons why a veteran can cancel a loan, and what happens if they can cancel it? What should be happening on those loans as far as how to properly do that?
So are you asking in light of the escape clause for those purposes,
Just
or just in general?
just the escape clause, what the escape clause really does tell a veteran, what it does provide for a veteran in those cases where the home doesn't come in value.
For sure. That's exactly when the escape clause is valid, when the home does not come in for value. So when the home does not appraise for the contractual purchase price, the escape clause allows the veteran to go back and to renegotiate that. So it does allow the veteran to exercise the escape should the property not appraise for what they're contractually, purchasing the property for.
So effectively what you're saying is that if the borrower sticks with the current addendum, the current amendatory clause with VA, that they shouldn't really fear the issue of a low value. But if they're going to lock themselves into telling the buyer or the seller that we'll pay, whatever the house appraised for, we'll pay up to our purchase price, that puts them in a very precarious position, because as you and I both know, if they do that, that amount over the appraised value has to be their own money. They can't borrow it, right? They can't, they can't get it a gift. It's got to be their own assets, correct?
That is correct. So should the veteran elect to purchase the property despite the reasonable value being low, any overage must be made up for by the veteran's own resources. They can't get a gift. They can't take a loan for that amount. So while the veteran has the ability to do so, there is a stipulation that those funds do come from the veteran's own resources. You're absolutely correct.
Well, let's back into that for a minute then, because there are some DPAs out there, down payment assistance programs, for those that don't understand acronyms. We realtors speak in tongues. But there are some DPAs out there that would offer, let's say, 5% towards closing costs and down payment. And comes now the short appraisal. And the veteran buyer has, when he puts all of these funds together, including some of his own, but he wants to take, I don't know, $5,000, $7,000, $8,000, depending on the price of the house, out of those funds to pay that difference or a difference above. That is or is not okay in the VA world. Go ahead and expand on that.
So DPAs are definitely interesting when it comes to VA loans in general. There are a lot of DPAs out there, and they are absolutely a really great course for veterans who do not have the financial resources to cover their closing costs or down payments in a lot of instances, but those are not considered the veteran's own funds. So to the extent that they can use those for that overage, that would not be a down payment for, or that would not be an acceptable use or acceptable source for that overage. So that would have to still be from their own funds.
Okay, fair enough.
So from our standpoint, from the lending standpoint, what we've tried to do is recommend to veterans that if they do have a DPA, to use that to pay closing costs, because they can use that for all the closing costs they need. That way they can isolate their own money to actually keep that to maybe pay the difference in the down payment requirement and not use the DPA for that because, like you just said, I mean, you can't use it for that.
That's a
And
great
so it really
recommendation.
boils,
Yeah. That's a great
so it boils
recommendation. And
down to
I would
how they,
encourage all lenders or those that are helping the veteran through this very complicated process of purchasing a home, especially in this market right now, to look strategically at how to use those DPA funds to best reach the end goal, which is to get the veteran into the home that they're trying to get into.
Yep.
exactly. So let's switch gears a little bit, and I'm going to throw this out to both of you. This is a question about the Blue Water Navy Act of 2019. It eliminated county loan limits, and I'm still surprised. I go out and do training on a regular basis in the industry, and I'm still surprised at how many people don't understand what the Blue Water Navy Act did for veterans with regards to, the way it was named in the law, a covered veteran versus an uncovered veteran, and what that does for them with regards to limitations if they have previously used entitlement versus limitation versus no limitation if they don't have previously unrestored entitlement. From an issue, Heather, from that issue, can you expand a little bit about how many loans VA has seen that truly exceed county loan limits now and are just blowing past, into the millions of dollars? Do you have those numbers by hand, by any chance offhand?
So offhand, I don't have those numbers, but if I said that the Johnny Isaacson bill was significant, the Blue Water Navy Act is absolutely a landmark piece of legislation for the home loan benefit. So and I can't say that enough. So in addition to providing a funding fee exemption for service members on active duty who've received the Purple Heart for their valor, this legislation truly expanded a veteran's ability to use the benefit to purchase their home of choice. This is especially true in high cost areas where you're saying there are loans in the millions of dollars, because what it enables a veteran with full entitlement to do is to purchase that home because it removed, without a down payment, because it removed the maximum amount of guarantee entitlement available for loans made to purchase, refinance, or construct a home. So should the veteran have full entitlement and their loans over $144,000, the loan made to the veteran would receive a 25% guarantee on the maximum loan amount. So, there are some stipulations there with value that we previously were alluding to with regard to the escape clause, but this was landmark in that it allows those millions of dollars of home loans to be made without a down payment, where previously the entitlement calculation would have been made and the amount of maximum guarantee that would have been available to veterans would have been based on the Freddie Mac conforming loan limit 100% of the time. So it was truly a wonderful piece of legislation.
Yeah, and coming from VA rep, we're very happy to have partnered with Congress and with other people to make that happen and keep that benefit available to veterans, especially if they happen to have prior use that's not been restored, to still be able to utilize that remaining entitlement up to the loan limit, which the way the law had been previously written, as you know, G2, would have wiped that out completely. And they would have had to basically have a down payment equal to the amount that they had previously used.
And then the other thing that VA rep worked on with members of Congress was to originally, in the original iteration, I don't know if you know this, Heather, the original iteration, the funding fee waiver for anybody that wanted to step out into the jumbo loan, the funding fee waiver was going to be limited to only if you were 100% disabled. VA rep, along with our congressional partners, got that changed so that there was no, the funding fee waiver did not get touched. So regardless of whether you were 100% disabled or something less than 100% disabled, that flowed into the Blue Water Navy Act. And we're, like Jeff says, we're really, really thankful to Congress for listening to our input to make sure that we all retained our A disability. I'm 60% disabled. You're disabled, aren't you?
I've got no disability.
You got no. Yes,
No,
he
I'm all
does.
there.
He is
Well,
absolutely
G2,
disabled.
G2, this is just a testament to how much our voices can be heard and how much impact and influence you actually have in perfecting and in improving our process and our benefits. So the benefit really is reliant on, on all of that feedback, and those partners that we have and that you have in Congress, like, they certainly listen to the feedback that's provided, and we do the same. To that end, we're constantly striving to find efficiency improvements and gains to make our process faster, to get veterans into their homes faster, and to make our product the product that is the product that is turned to for all veterans. It's very disheartening to hear of veterans thinking that another product is better for them, when in actuality our product is, by and large, generally the best product for veterans out there. So I would say that, your work on that bill specifically is a testament to how much influence, industry really does have in helping to shape our benefit for the positive.
So I have some
I've got a
data.
follow-up. Yeah, I was
Oh,
going to
yeah,
ask you,
yeah.
James, if you've got any if you've got any add up to that.
So I only track $1 million and above. So not necessarily truly in the jumbo space, but for $1 million properties and above, calendar year 19. So calendar year 19 was prior to Blue Water Navy. We did 2023 loans, 2023 loans that were $1 million and above. Calendar year 20, we did 6,431. And calendar year 21, which is a cutoff as of the end of March, we are 2,054. And our maximum value loan amount was $5.6 million.
Whoa.
So
G2, your homes are becoming more and more expensive.
well, look at you guys. What's that divided by
Whereabouts
3?
was that one
G2?
located?
Right. What's that, Jeff? I mean,
What's
Scott.
that divided by
James?
3%?
Yeah. So whereabout is that actually located? Can you give us at least a state or a county?
So California is our number one volume. You know that, Jeff.
Oh yeah, absolutely.
California has always been our top volume, but that was in King County, Washington, and Bellevue.
King County, Washington.
Wow.
So it's probably
Living next to
1,800.
Jeff
Represent.
Bezos, probably.
It's probably a
No, I'm sure.
Yeah, it was a
his-
two-bedroom condo in
that-
King County.
Exactly. That was his casita. Yeah.
And I will tell you the scary thing. So what I do track is I do look at our loan to value, our LTVs, a lot of 103% LTVs, which is very scary to me because just talking VA talk, I look at what our guarantee is. What we are extended to on our guarantee is phenomenal. I do track that with Jeff and John quite a bit as far as how accurate our values are. I'm concerned from an appraiser standpoint. Are appraisers doing the right work in the right area? I do have some concerns about that. But at the same point, we have a lot of 30% LTVs. We have a lot of 20% LTVs, which makes us start to look at this a little differently. And what are we doing the right work for a veteran who's putting 50, 60, 75% down? And what should we be for a veteran that's got that? There's a lot, and I'll tell you, there's thousands of our veterans that are putting substantial amount of money down. All VA. This is one of the things, just to add to the topic, is just because you're going VA doesn't mean you're 100% financed. There's a lot of our veterans go skin in the game. G2, you and I have talked about this, and I think that's one of the things I would like to convey to all your audience. VA does not automatically mean that there's no skin in the game. That a lot of our veterans are coming cash to the table. And I know just in the $1 million market, it's saturated with a lot of people putting a lot of cash down. Yes, we have a lot of
Exactly.
Absolutely.
We've seen a number of loans in caliber at 2.5 million, and it's surprising how many veterans are willing to jump in there and put $200,000 down just simply because it makes sense for them financially, because a lot of them are second-time use, and they're seeing that 3%, 3.6% funding fee, and they're thinking, well, I've got the cash. If I dump 10% down, I'm going to drop myself all the way to 1.4, and your average loan amount at 300, that 3% is not that bad. $2.5 million, that's a lot of money. So they're dumping that,
cheddar.
and they're getting Yeah, that's a lot of cheddar. Yeah, absolutely. So that's amazing to find out, because I know a year ago in 2020, after, oh gosh, I think it was about 6 months, there was a big one in Hampton Roads in Virginia. No, yeah, I think that's where it was. And it was like 3.4 million, but this 5 million in King County, that's pretty amazing. That's just over the top.
Yeah,
Can you tell us, was that 100% loan, or was that one with down payment?
That was 89.8% loan.
There you have
there
it.
you
I
have
mean, the appraisal was what, close to
Just
6
below
million?
it, I got a 4.45 million. It's 103.
Ooh, wow. Well, I guess the two make up for each other in liability. That's pretty amazing.
You had a follow-up question for him. Do you remember what it was?
No, I completely forgot it. I got too excited
like,
about
like
that.
I told you, he is disabled. He is,
Yeah.
trust me.
It's
Oh
only
my
from putting
gosh,
up
that
with
was-
us, I'm sure.
Yeah. James, I guess I do have just one quick follow-up question that I'd like to talk about real quick, and that's on the ROV process. We notice, being a national lender, we see a difference in processes, and I know that VA has changed their structure, and so they've completely restructured how C&V is led in the field, as well as the loan policy sections. But we notice the biggest differences in how different offices have been establishing individual policies within their regions. And being that you're the chief appraiser out there, and you talk regularly with the two leaders in the field, can you tell us what you're doing internally to try and standardize policies across the 8 regional loan centers?
Thank you for setting it up and allowing me to talk about a future state. Because future state is going to change drastically. One, we don't capture this data. It's not ingested into our platform or into our services. So future state, we are working with the solutions team. We see to be able to go in through the web hub to put in the information, not necessarily in the grid, put in statements. We're looking to bring that in so it creates what we call a work bucket. We need to standardize this time to reduce the time quickly. I will tell you there's a sweet spot. As I've been analyzing the data, and this is something that hasn't been done before, is collecting the data from all the 8 regional loan centers, or what used to be called the regional loan centers, the 8 different regional offices, and gathering it and looking at and analyzing. 3.5%, 4% is a sweet spot. We see this time and time again, that when it's a 3.5% to 4% or below, the chances are of that being approved is faster, and the higher odds of it being approved. So we need to make a separate process for that. When we start talking, when lenders come in and veterans come in and are asking 25, 35, 40% increase, that's a different ball game. Those take weeks. Sometimes taking someone, sending out to the field to go look at the comps of sales, and the chances of those getting approved are slim to none, because the valuation process was just done wrong. They were done by, I hate to say the price per square foot, but we used a lot of price per square foot, and we used the wrong comps, and they're not comparable properties. So future state, we are developing a process to automate this. Future state, we are looking to have policy to make it a simpler, faster, cleaner way to get the smaller percentages approved faster. And then we're going to make the requirements on the lenders, agents, veteran, for those large requests, not to be more difficult or hard bar, but you need to prove to us coming in, if we're going to dedicate the time and resources to go through this whole process, they need to have a little skin in the game too. And so I think that's just being an honest broker about it. We want to do the best for the veteran. But to send SAH, or our agents who are out in the field, 4 or 5 hours away to go look at sales, that when they get there, they say, not even comparable, not even in the realm of comparable. We wasted a lot of man hours, resources, and government time to do so. So we're building a better mousetrap. Currently, it is a little arduous. It's a little daunting. And so we are trying to address that. We want to get this down fast because, again, like I mentioned at the beginning, we know when we're at the ROV process, especially on a purchase, time is of the essence to keep that contract alive. And we want to
Yeah.
make sure we're doing everything.
And
we
as
can to
being
do that.
good, yeah, and being good stewards and participants in that, I really thank all the efforts that you've made, all the efforts that VA has made in trying to help out our veteran buyers. Your help has been so unbelievably gratifying when we are able to actually close that loan for that veteran, because the Regional Loan Center looked at it and said, you know what, for VA purposes, we think that that value is supported, and we're going to go ahead and raise that value on the NOV. I can't tell you this, the responses that we get back from our veteran borrowers. There's most of them are nearly in tears. Many of their spouses are just, just so grateful for the help that you've given them. And the help that VA gives to veterans, I think, goes too often unacknowledged. And I think that's why we want you guys every year to keep coming back and participating in this, so that we can give you also the kudos that you deserve for helping our industry and helping us help veterans the way we do. We're almost out of time. We've covered a lot of territory, and I'm so happy that we've had both James and Heather on here. I've got a long relationship of time with Heather. I used to work with Heather. She worked with me when I worked at VA. I can't tell you that, the loan policy section couldn't be in better hands right now. Thank you so much for stepping up to that, because I know that was a pretty big leap for you, Heather, and you're totally ready for it. Go for it, girl.
Thank you, Jeff.
Mark, James, Heather, we're coming to our limit. G2, you got any last words?
I do. James, we go back a long way too. You know that James, before he was what he is today, was actually a field appraiser for the VA. He appraised several properties for me way back in the day. So, the two of you, thank you so much, both of you. And Mark, if you're anywhere listening and watching, thank you again. Next year, wear your hat and be sure to come out to Arizona and grab a cigar with me and James and Jeff.
Hey, G2,
And
really
Heather.
appreciate that, and Jeff, and once again, on behalf of our executive director, Jeff London, we're so appreciative that you invite us to this year after year. Thank all your members, and please, when you get a chance, give a shout out to Son and Dustin. We really appreciate the partnership.
All right.
Will do.
So, well, with that said,
Take it
Dustin, we're going back to you, back to the main studio.
All right. Thank you, gentlemen. That was quite a session there. You guys went over a lot of detail, a lot of information. Did not disappoint. I knew you guys would dig in there. I appreciate you, VA, Mark, James, Heather, for coming on and sharing your words of wisdom, as always. You're always supportive of us, and we really appreciate that.